here. So they're not going to let price close below their entry point if they can help it. If they can help it, they will not. And what happens on this next bar, the public gets involved again. And so before we can really go up and break out here, the public needs to be taken out because operators don't want you to go along for the ride. So let's see what happens here. This is the public bar. Another no interest bar. So we closed up. Well, we closed up on lower volume. And so that's a weak bar. That signals weakness even though we closed up here. And that's to be expected because we want to stop out these public traders here. And here we go, operators here. Now this is also a strong bar because it didn't close below the low of the prior bar, and it had lower volume. So operators are still buying in here, but as you can see, we're coming down here to take out these public stops. And this bar here is where it's the lowest that this bar goes, but it goes low enough to shake out most of the public before what? Continuing upward. And a rapid continuation upward once most of the public traders are out of the market. But now let's look at point A here. I have illustrated on the chart. Now we have two bearish 50% bars here. The price moved up. Well, why is that? Well, remember I said we want to see the bearish 50% bars at a top. At a top signals weakness, but when you see a bearish 50% bar at a bottom, it signals strength. And why is that? Back to our buoyancy factor, the principles of buoyancy and gravity. Here we're headed down. Now we're headed back up. We didn't close up, but we still closed higher than the open of this bar. And just like it tells us that up here we found that gravity was in control, well, this tells us that buoyancy is in control. Buoyancy is control here, and this is why when you see a 50% bar at a bottom, price will usually rise, and they call it climbing the flagpole. Here we have another. This bar is not a 50% bar, but it was close to a 50% bar. And let's see who was involved. Notice our pattern here. We always want to see who's involved in the move. Okay, the public is involved in this bar that occurred right before the 50% bar. And so we have this bar with the public, and then next we have a 50% bar. And this 50% bar is participation by operators. So now we know who's selling up here. We know exactly who's selling. The operators are selling here at this resistance level. And so to tighten up even more this conclusion is that we know that the public gets faded. So we see the public almost a 50% bar, but not quite. Then we see the operators on the 50% bar. That tells us price is headed down. Okay, I don't want to get too involved, and we'll get more in it later when we get into adding the components together as far as your trading strategies on when to enter using these techniques, and when to exit, and where to place your stops and things like that. So this will conclude the bearish 50% bar, and next we will look at the bullish 50% bar.